Welcome to the Deep Dive. Today we are taking a scalpel to one of the most remarkable and quietly powerful success stories in the entire fintech world, Stripe.
Mm-hmm.
I mean, when you think about massive technological disruptions, you probably picture social media giants or, electric cars. Stripe is none of those things.
That's really the critical distinction, isn't it? Stripe didn't try to become a bank.
No.
They didn't launch some flashy consumer app, and they certainly didn't, invent a new currency. They focused entirely on infrastructure.
Just the pipes?
Exactly. They set out to solve what, on the surface, looked like one of the most mundane, most painful problems on the internet: how to actually accept money from customers globally.
And by fixing that boring problem, they became this invisible scaffolding for modern digital commerce.
Mhm.
We're currently processing hundreds of billions of dollars a year.
It's staggering.
So our mission today is a deep dive, a shortcut, really into understanding the true backbone work of financial technology. We're going to look at why real, sticky, enduring innovation often hides beneath the surface, not in the apps you tap every day.
To really get why Stripe was such a breakthrough, you have to rewind. Go back to, say, the early 2010s.
Okay.
If you were an entrepreneur or a small business trying to accept a payment online, this system was, it was basically designed to make you fail.
It really was.
It was an analog process trying to manage digital money.
It was a bureaucratic nightmare. It wasn't just about having a website. You needed a full physical relationship with a legacy bank.
Right.
You had to apply for a specialized merchant account, which, that took months of underwriting, just piles of compliance, paperwork, KYC, AML.
All the acronyms.
All of them, yeah. And often high startup fees just to prove you were legitimate enough to hold a digital wallet.
Exactly. And even if you got approved, you then had to acquire a separate payment gateway tool.
Another piece of the puzzle.
Another piece. And often a whole developer team just to stitch these fragmented systems together. You weren't just plugging in a tool. You were trying to stitch together like 5 different technical standards from 5 different institutions.
And manual. It was expensive.
It was hostile to innovation. And worst of all, it only worked reliably in one country at a time.
So most small businesses just take it. They give up. The cost of entry, the sheer regulatory friction, is a massive gatekeeper. And that's the environment that Patrick and John Collison, these two brilliant Irish brothers, walked into.
They're programmers, not bankers.
Exactly. And they looked at this entire fragmented mess, and they asked the simple defining question that changed everything. Why is taking money online still so unbelievably difficult for the builders?
Okay, let's unpack this shift in perspective. Stripe's true genius wasn't in building something totally new, but in recognizing that the fundamental problem was one of friction.
But wait a minute. We had PayPal back then. We had existing payment processors.
Yeah.
How did Stripe manage to compete, let alone win, against incumbents who already had all the market share?
That's where the key leverage point comes in, and this is really the first great masterclass principle: developer-first design.
Developer first.
The existing players, including PayPal, they focused on the business owner or, the end user interface. The Collison brothers realized the future of the internet economy wasn't going to be unlocked by sales teams talking to CEOs.
Right.
It was going to be unlocked by empowering the developers, the people actually building the products.
So they didn't treat payments as a financial problem. They treated it as a coding problem.
Precisely. They created an application programming interface, an API that was just so clean, so well documented, so elegant, that a developer could integrate payment functionality in minutes. In minutes, with just a few lines of code, instead of weeks or months of complicated systems integration and paperwork. That simplicity was the competitive hammer that just shattered the incumbent models. They eliminated the merchant account, they got rid of the gateway complexity, and they handled all the regulatory requirements behind that single, elegant API call.
That's a massive insight.
Right.
If you make it painless for the person who actually builds the product, the solution just spreads organically. It's like selling shovels to gold miners.
Exactly.
But solving friction is one thing. Stripe handles people's money. They are the literal artery of thousands of businesses. How do they convince major enterprises to trust a young startup with their cash flow, considering this is probably the most highly regulated industry in the world?
That's the next stage of the strategy: building trust and infrastructure. You are absolutely right. In fintech, trust isn't a nice to have, it's the product.
It is the product.
It involves security, managing fraud, handling complex international chargebacks, and staying ahead of every regulatory shift across, 45 countries now?
Yeah.
Stripe built its credibility using a three-part framework designed for extreme reliability.
Okay, tell us about that framework.
First was an extreme, almost obsessive focus on uptime and reliability. If you handle payments, your infrastructure just cannot go down, period.
Non-negotiable.
Non-negotiable. Stripe invested heavily to ensure their systems rarely ever fail. This professional credibility is everything when you're handling billions. Second, and this is crucial, was compliance by design.
Okay, we hear that phrase a lot, but what does it actually mean in practice for Stripe?
It means they saw regulation not as a burden to avoid, but as a feature to solve elegantly. So when a new tax law or data privacy rule emerged in Europe or Asia, Stripe didn't wait for the business to figure it out. They integrated the solution directly into the API.
So they made compliance the invisible default path.
The default path. For a business using Stripe, the complexity of local taxes, KYC verification, cross-border currency conversion, it just vanishes.
The developer doesn't have to think about it.
Not at all. Stripe has automated it. They took on the regulatory headache so their customers didn't have to.
Which is huge.
It's massive. And the third pillar was global scalability. Legacy providers were inherently local. Stripe built a unified global platform from day one, but designed it with these flexible local layers underneath.
What did that allow?
Well, it allowed a US-based entrepreneur to accept payment in euros, yen, or pesos, handle the currency conversion, and remit the money locally, all within that same single line of code.
Incredible.
And that ability to unite fragmented global commerce is what cemented them as the quiet professional trusted by enormous companies.
Okay, here's where it gets really interesting for me. Once they had that initial simplicity and solved the trust hurdle, they triggered a self-reinforcing growth engine, the infamous Stripe flywheel. How does that mechanism work to make them so unstoppable?
The flywheel is just this engine of compounding value. It starts with solving the developer pain point, which we covered.
Right, which leads to rapid adoption by high-growth startups.
Exactly. Because the system is so easy, new companies just switch to Stripe immediately.
So startups adopt quickly, that's step one, and then what?
Well, those startups grow. Think of companies like Shopify, Uber, and Deliveroo in their early days. As they grew and their payment volume grew, Stripe's revenue grew automatically.
Because they take a small percentage of every transaction.
They take a percentage. This automatic revenue growth then fueled massive internal investment back into their infrastructure, their compliance teams, and the development of more tools.
So the investment back into the tools makes the product even better and attracts more developers. It sounds like that initial simplicity gave them the financial permission to become highly complex later on.
That's the core takeaway. The improved product and infrastructure then attracts larger, established companies who look around and realize the entire startup ecosystem is already built on Stripe.
So the big companies follow the lead of the builders.
They follow the builders. The cycle just reinforces itself, driving even more volume and solidifying Stripe as the natural default choice for anyone building anything on the internet globally.
And we're not talking about niche players anymore. We're talking about Amazon, Google, Airbnb. Millions of digital businesses relying on Stripe's pipes. And that successful footprint gave them the runway to expand their invisible power far beyond just simple payments.
Right. They realized that sitting at the center of the world's cash flow gave them the data and the leverage to offer an entire operating system for finance.
Not just a tool, an operating system.
Exactly. And this is where the product expansion phase begins, creating that critical lock-in effect.
Can you detail what some of those additional layers are? Because this is what makes them a, $50 billion plus infrastructure platform, not just a processor.
Absolutely. So beyond simple checkout, you have Stripe billing. This is essential for managing the complex recurring revenue of the entire subscription economy. Handling failed payments, pro rata upgrades, all of that.
Okay.
Then there's Stripe Connect. This is massive for the platform economy.
Explain, connect with a strong example, because this one is strategically huge.
Okay, think about Uber or DoorDash. Every time you take a ride or order food, Connect is the thing in the background that calculates the fare, deducts the platform's fee.
Instantly.
Instantly. It handles dynamic tax requirements across various cities, and it instantly pays the driver or the restaurant in whichever country they operate. That complexity, calculating and paying thousands of different vendors globally while maintaining tax compliance in a dozen jurisdictions.
That's a nightmare.
No platform could manage that complexity themselves without this tool. It's impossible.
That functionality alone is critical for any multi-sided marketplace. What else?
Well, then they moved into pure banking services. You've got Stripe issuing, which lets businesses create their own virtual or physical corporate cards. But the most insightful move, strategically, was Stripe Treasury.
Treasury.
This offers banking as a service. It allows businesses to hold funds, earn interest, manage working capital, and they do this by partnering with established institutions like Goldman Sachs.
Wait, hold on. If they are building all this infrastructure themselves, why partner with a giant bank like Goldman Sachs for Treasury? Why not just build their own banking license?
That's the fourth masterclass principle. Partnerships are more scalable than attempting to replace banks entirely.
Interesting.
Stripe intentionally avoided becoming a bank because that would introduce just enormous regulatory and capital hurdles. By partnering with Goldman Sachs, they immediately gain the regulatory trust, the deep capital reserves, and the compliance framework that would take decades to build.
So Stripe handles the interface and the software.
And the bank handles the licensed financial holding. It allows them to move so much faster.
So they're essentially leveraging the trust of the very incumbents they're supposedly disrupting.
Precisely. And finally, because they see the real flow of money for millions of businesses, they launched Stripe Capital, offering lending based on real-time payment data. And for early-stage entrepreneurs, they offer Stripe Atlas, helping them legally form U.S.-based companies from anywhere in the world.
That breadth of products, from incorporation to funding to global compliance, that's what creates that functional lock-in. Once you start using multiple Stripe tools, switching becomes a technical and operational impossibility.
Exactly. And that whole infrastructure-first mindset provides incredible lessons for anyone looking to build a resilient business.
Yeah, let's summarize those.
Okay. The first lesson we discussed: solve a real problem. Be fundamentally useful, not just trendy. The second: infrastructure innovation is inherently more powerful and enduring than front-end app innovation.
Apps come and go, but the pipes stay.
The pipes and the standards they operate on rarely change.
And the third principle, which I think is often missed, is that developer-first approach we mentioned. By providing developers with the competitive advantage, Stripe ensured it was adopted by the builders, giving them this immense organic growth.
And if we look at the actual scale of that simplicity, it's humbling. Stripe is active in over 45 countries, supporting more than 135 currencies. They are the financial layer that underpins the operations of massive public companies and millions of solo entrepreneurs alike.
That scale is staggering. But let's talk impact. What do you think is their biggest contribution to global commerce?
I think their greatest contribution is genuinely lowering the barrier to entry for global digital businesses to nearly zero. Stripe democratized commerce.
How so?
Previously, if you were an entrepreneur in, say, a developing economy, selling to a customer in the U.S. was prohibitively complex. Now you can start a global business in hours.
Without ever stepping foot in a bank.
Or hiring a specialist compliance team. This represents immense financial empowerment, and it just accelerates innovation across advanced and emerging markets alike.
So what does this all mean? When you boil it all down, Stripe's ultimate success wasn't about clever branding or launching the next big social craze.
Not at all.
They succeeded because they focused on reducing technical and bureaucratic friction at the deepest level possible. They understood that the faster you can make money move, the faster the digital economy grows.
The blueprint is so clear. Identify the most painful, boring friction point. Solve it with elegant software for the developers who build the future.
Then build trust and compliance into the design.
And then scale globally by partnering with the existing financial system rather than trying to demolish it.
And as you, the listener, think about how finance and commerce will evolve over the next decade, consider this provocative thought. Stripe proved that the strongest fintech companies don't succeed by simply disrupting incumbents. They succeed by making complex things simple and by using the institutional trust and regulatory scaffolding of those same incumbents, like partnering with Goldman Sachs for Treasury to build their own deeply embedded infrastructure.
Given that infrastructure stays while front-end apps evolve so rapidly, I'd have you think about how Stripe's strategy of building these silent, compliant, indispensable pipes alongside established financial players will define the future of global finance, especially as cross-border regulations continue to multiply and complicate the market. That's a powerful lesson to explore on your own.